Muted. Muted.
All right, well, I wanted to thank everyone for joining us today on the training call for AdvisoryWorld. My name is Viraj. I'll be taking you through the detailed analytics report. My goal today is really to highlight the functionality of the detailed analytics report, as well as the Monte Carlo simulation and the correlation report, which are all part of that detailed analytics report set. Now, what I've done is I've already set up an illustration we're going to work with, simply titled it Sample Model, threw in a couple of positions. I've allocated to these positions. I've set this as a portfolio of investments, which is pretty important for the output we're looking for here. With that, I can go straight to our reports. And today, again, we'll be working with the detailed analytics report. This is the fourth report down for most of you folks that have access to all of our reports here. And to start working with the detailed analytics report, really what I'll do is click on parameters next to the report title to see the different options within the report. Now, the first thing I wanted to highlight for you here is within the detailed analytics report, there's actually a correlation report. That's found right here on the top left. And what I can do is simply click on correlation report. I'll get this interface. And most of you should be fairly familiar with our reporting protocol here. It's going to default to the earliest common time horizon amongst the assets in the portfolio. And the correlation report by default is going to use the portfolio assets as well as the portfolio asset classes. So I'm just going to go ahead and build this standard correlation report. And while that's coming up, I'll also let you know that everyone's muted right now. If you have questions, please feel free to type those into the question chat box, and I'll try to answer those as they come up. This correlation report here has come up fairly quickly. Again, basically what it's showing us is the different portfolio components, their benchmark, and the correlation between the portfolio component, its benchmark, and the other positions in this portfolio, as well as the other benchmarks in this portfolio. So here, for example, we're showing position BCSIX. Obviously, its correlation to itself is 1. Its correlation to its benchmark, then its correlation to the other positions, as well as the other positions' benchmark in this portfolio. So again, kind of a cool way to get a breakdown of the correlation of your portfolio here. And all of this, again, is right within your detailed analytics report on the top left with correlation report. Now, the next thing I wanted to show you was kind of the different components of this detailed analytics report. It's a very customizable report. You can really make this report your own. You have the ability, as I scroll through here, to kind of mute entire sections simply by unchecking the display section box. To show the section, obviously you simply click that. You also have the ability to customize a lot of the components of each report section here. So for example, here I can pick what I want to show in terms of the investments in the benchmarks, their trailing returns, standard deviation, or Sharpe ratio. Also have the ability to add in my custom fields. Here what I can do is really customize this output to show up to 13 fields that I want to show here. I can select anything I'd like out of this universe here and show up to 13 of these fields in a custom report for myself. Now again, as I stated, you also have the ability to get rid of the entire section. You have the ability to select what components in the section you'd like to show. The second set of the detailed analytics report is the trailing performance in graph. Here also you have the ability to select your benchmarks, add additional benchmarks. If you want to get rid of that section, again, simply uncheck the box. Risk analysis, graphs and tables. Again, ability to really customize the benchmarks here, as well as the MPT stats you want to show. Risk analysis report. This is a good one to show here. You see that the inflation rate has a red squiggly line under it, meaning that this field is required. Most advisors are putting something between 2 and 4% here. I'll go ahead and put 3. We don't need a minimum purchase power loss. I'll go ahead and leave that field unpopulated for this example. Again, you have the ability to kind of show what you want to show here, as well as the confidence levels. eliminate sections as well as add sections simply by checking the box. Allocation graphs and tables. This should be somewhat familiar to you folks from the holding scan as well as the allocation analysis report. Style analysis, as well as a Monte Carlo simulation at the bottom here. And really you can think of the Monte Carlo simulation as within a report. This is going to be populated by whatever data you place into this Monte Carlo simulation area. For example, the beginning value is not going to pull your portfolio value. It'll be whatever is populated here. The end date is also entered in this section. You have to select a line style here. So here I'll go ahead and select dashes. And we have the ability to show annual values. So in this case, I'm going to go ahead and show all years for this illustration. Now also for Monte Carlo, I have the ability to adjust my return and cash flow assumptions. We'll get into this a little bit more as I actually build the report and walk you through it. But you do have the ability to adjust those assumptions here. Now again, for the sake of this example, I'm going to keep it fairly simple. I'm not going to make too many changes to what we have here. I'm going to go ahead and simply build this report and take a look at this with you. Now the detailed analytics report is the largest report of our set here, and it can take a little while to pull up. Just depending on the number of components and different things you have working in the report. Here it comes up for me fairly quickly. And right up front, as the report title might suggest, it's a very detailed look at the analytics of this portfolio. So right up top, I'm going to be shown the model versus its benchmark. Here I'm going to get information on the returns, standard deviation, and Sharpe ratio for the model versus its benchmark, and then each component of this model versus its respective benchmark. Really giving me a pretty drilled down look at what's going on here in the portfolio. So again, all of this information showing me trailing 1, 3, 5, 7, and 10 years on the returns, showing me 3, 5, 7, and 10 years on the standard deviation, and 3, 5, 7, and 10 years on the Sharpe ratio. Next page of this report should be fairly familiar to you. Looks a little bit like our hypothetical performance, trailing performance graphs on a lot of the reports. Below that, you have the cumulative return for the portfolio versus its benchmark. Calendar year performance for the portfolio versus its benchmark. And then really one of my favorite parts of the detailed analytics report is the risk analysis section. So here, this might look somewhat familiar from the holding scan report with the risk analysis graph here, but if you notice, the MPT stats provided on the right here dig a lot deeper than what we're used to seeing on just the holding scan. So here for MPT stats, not only are we getting the standard deviation, Sharpe ratio, alpha, beta, R squared, we're drilling down into the Sortino ratio, trainer ratio, we're getting the max drawdown, tracking error, up and down market capture, as well as benchmark return and standard deviation. So really, I'd like to think, pretty much as much of the metrics or MPT stats as your most discerning client would like to see on the portfolio level here. Next section is a risk analysis graph. This is simply a graph of the 1-year alpha, beta, R squared, and Sharpe ratio. Best and worst case analysis, they should be familiar from the holding scan report as well, showing you how this portfolio did over any rolling 3-month, 1-year, and 3-year period on its best and worst run, as well as the benchmark numbers. Next section is a modern portfolio theory analysis. And what I'll point out here is the engine that's kind of driving everything for MPT analysis in our system here is going to be really the rate of return and standard deviation. So these two components are going to be really what drives everything in the Monte Carlo section, as well as all forward-looking projections. And again, if you remember, I showed you in the parameters for detailed analytics, you have the ability to adjust that rate of return as well as standard deviation. For this report, everything here looking forward is going to be based off of the return and standard deviation. Normal distribution of returns with a 90% probability, showing us the likely range of returns, again, given this rate of return and standard deviation, which is taken from the portfolio level from the common asset inception date. hypothetical performance graph along with the return and standard deviation, theoretical range of values, showing us where this portfolio might be going forward, showing it getting less volatile as time goes on. Theoretical range of values, kind of an inverse of the chart above, showing us a theoretical range of the actual of the portfolio. This one's showing us the range of actual returns here. Again, everything driven here by the return and standard deviation characteristics of this portfolio. Macro allocation, asset class allocation, equity properties, fixed income properties, and metrics, all kind of repeats from the holding scan report. This isn't new or unique to the detailed analytics. Hopefully everyone's had a chance to look at these. Top equity countries and sectors, also from some of the other reports. The overlap report, also a part of the detailed analytics. And one unique kind of neat thing here is the style analysis graph for this portfolio, showing us which benchmark components actually contributed to the performance of this portfolio over time. So here, as we can see, 2002 through 2004, the portfolio performance was really driven by the Russell Midcap. And then we see the different components of the benchmarks that were contributing to portfolio performance going forward. Now, lastly on here is Monte Carlo simulation. Again, we went ahead and left this with a $10,000 starting value. And using the assumptions here with average return and standard deviation, what this is showing us is a theoretical ending value of this portfolio going 30 years out, which is where we set that, and giving us the likely ending values given different ranges of confidence. So at the low 10th percentile, we see ending value of about $50,000, and at the 90th percentile, we can see this portfolio going all the way up to 235. Again, the large fluctuation in volatility here, driven by the high standard deviation of this portfolio. Now, lastly on this report, the Monte Carlo simulation annual results shows us the ending values given those confidence intervals at different points in time for this portfolio, looking forward on a yearly basis. So here, I know I went fairly fast. I tried to cover everything in this report. And I tried to leave a couple minutes at the end of this for any questions you guys might have. Again, any questions you have, please feel free to type into the questions dialog box. I'll try to answer those for you. And the first question I see here is a difference between portfolio of investments versus individual investments. So real quick to highlight that, that was done on the allocation tab. Now, anytime we want the system to treat the positions we've entered into the system as a commingled group of holdings, we want to designate it a portfolio of investments. We select individual investments here. The system's going to treat these as individual mutual funds that might be competing against one another. So the report output is going to be greatly skewed there. But for the detailed analytics output that I just showed you here, you'd certainly want it set as portfolio of investments. I see a question from Bill asking if I can send a copy of the PDF as an example. I'd be happy to do that, Bill. I will certainly send that to you after this call. I'll shoot you over that copy of the PDF. And if anyone has any questions about this that maybe you don't want to ask in the public setting, might be more specific to your firm or your specific operation, please feel free to give me a call or shoot me an email. You should all have my email address, vkumar@advisoryworld.com. That's VKUMAR@advisoryworld.com. My number here is 800-480-3888. I'm at extension 105. If there's anything I could help you with on an individual basis, please reach out to me. Next question I see is a summary of what different reports might be used for different purposes. I'd be happy to really address that with you on a one-on-one basis. I feel like that might get into a little bit longer conversation here, Jeff, than I'd intended. I wanted to keep this kind of just brief and on the detailed analytics report, but I'll certainly send you an email and give you a call, and we can set up something to review all the report functionality. If anyone else has questions about any of the other reports or any questions in general about AdvisoryWorld, please feel free to reach out to me. I'd be happy to answer those for you on a one-on-one basis as well. Okay, I see a question here. So it's asking, how does the system calculate returns on a portfolio if one or more of the positions doesn't have a long history? And that's a great question. As I stated earlier, our system's always going to default to the longest common time horizon amongst the assets in the portfolio. That's the default setting here. In this case, I picked positions that had a track record that went fairly far back. Now, let's say, for example, rather than 6/30/1997, this portfolio went back to 6/30/2014, and we wanted to pull further history. Now, our system's always going to default to that 6/30/2014 date, if that was the latest common inception date. But you'd also have the ability to come in here and select the common asset share class and index inception option, which, as you see here, is going to take us back to 88. So what will happen in this case is our system is going to go ahead and use the position returns as far back as it can. Once it runs out of those position returns, it's actually going to go ahead and piggyback the benchmark returns for that position and use those to backfill history. And I'm holding weekly training sessions going forward that will discuss different reports, different case uses, and things like that. So please stay tuned for those. Again, if you have any specific questions that might be more time sensitive or something you want answered, reach out to me. I'd be happy to set up a call with you one-on-one. Again, my phone number here is 800-480-3888. I'm at extension 105. I've kind of used up a couple extra minutes. I went ahead and scheduled this for 15 minutes. I don't want to take up too much of your time. If you have any other questions, please feel free to ask in the chat dialog box. Otherwise, I want to thank you for attending this training session, and we look forward to seeing you on next week's session. I will be hanging out on the phone call here if anything comes in for the next couple of minutes.